Hi everyone, it's Stephen. The property market has cycles, also known as the property clock. Right now we're in the boom phase of the property cycle. On average, this lasts for 7 years before we see a property crash. But we're only 2.5 years into it, and there's already concerns that the market's starting to cool and that we could be heading into a recession. Right now we're seeing inflation rate at its highest level in 40 years. We're seeing the stock market sliding backwards, coupled with the cost of living crisis, is sparking a boom in first-time shoplifters. The Bank of England has been raising interest rates now 4 times in a row, and this looks set to continue in the coming months. A recession now looks very likely. So I'm going to be discussing in this video what this all means for property investors in the current market, whether you should buy an investment property right now in 2022, and what I do. You may have heard of the term the housing market cycle. This was first identified by a UK economist called Fred Harrison. He traced it back to over 200 years to conclude that the average length of a full cycle is around 18 years. And this is divided into 4 distinct stages. The stages are recovery, mid-dip, boom, and recession. So Fred Harrison claims the next bust is going to be in 2026. And this is because the last one happened in 2008. And if we add 18 years to that, we get 2026. We definitely are in a boom phase right now. And I would say that the mid-cycle dip probably did happen around 2019. So adding 7 years to 2019, the start of the boom phase, does take us to 2026 as well. But is it as simple as that? So let's take a quick look at the facts right now to determine if we're likely to see a crash sooner than this 2026 prediction. 4 key things drive house prices: jobs, the interest rate, and supply and demand. Right now we're seeing employment figures at their lowest rate in 50 years. Job openings outnumber those looking for work for the first time on record. We currently have the highest inflation rate in 40 years. And it's currently at about 7%, and this is anticipated to rise up to about 10% later on this year in 2022. The Bank of England's target inflation rate is 2%, so they'll increase the interest rate to control how consumers spend their money, and this impacts how much a mortgage will cost. Interest rates right now are still historically low, with only a 1% Bank of England interest rate at the time of recording, but it does look like it's going to go up this month. And they've gone up every month for 4 times in a row right now. And this isn't just happening in the UK, this is happening all across the world globally, as the US, Australia, New Zealand, Canada, all these markets have increased their interest rate to bring down the rising inflation that we're seeing globally everywhere right now. This will eventually stop banks from lending and will stop people being able to buy properties at a larger price. We're seeing property prices increase faster than people's salaries. We've seen in the last 2 years that the banks have increased their salary multiplier from 4.5 to 5.5 or above even. They're offering higher loan to value ratios, and they've increased the mortgage rates from 25 years to 30 or even 35, or in some cases 40-year term mortgages. And we've seen, according to Halifax, that house prices just in May have increased by 1% in that month. Because of this reality, buyers are now trying to buy faster than they were before because they want to jump on the low interest rates that are still out there, because mortgages are still affordable at the moment. They can get higher loan to value ratios and get good length term mortgages. However, Halifax are reporting that buyer demand is down, but buyer demand was at extremely massive levels. So for it to be down, it's just down a little bit, but you know, we're still seeing that demand is outstripping supply. A recession seems like it may be just around the corner, with GDP dropping for the 2nd month in a row in April and May. But to be classified as a recession, we have to see 2 quarters of GDP drops below 0%. So with all that said, should you buy an investment property now or wait? The fact that demand is slowing could mean that we're at the peak of the seller's market, as we see interest rise and people simply unable to afford to buy their own home until their salaries catch up or house prices come down. The housing market right now is still booming. Properties that come onto the market that are priced right are selling just as quickly as they were in the last 12 months, days or weeks. So if I was looking to sell a property, I'll be selling it right now. Buying a property, I would be more cautious. As a property investor, buying a property at the right price is still fundamentally the best thing that you can ever do. Because if you're buying at the right price, you're locking in your profits from day one. If you plan on refurbishing a property and adding value to it, which is my approach for buy-to-let investing, I'd still be buying in this market in 2022. I don't see prices dropping this year because demand is still outstripping supply, and I see interest rates, they're gonna go up, but you're still getting good loan to values on mortgages. Lenders are still lending on property prices, and valuations are still valuing up to the agreed purchase price. I wouldn't be buying new apartments though in 2022 or any new build properties because they're just overpriced generally, new build properties, especially apartments. I'll be looking to buy freehold second-hand homes, ideally that can be rented to families or young professionals in good populated areas, or properties that could be converted to HMOs in areas where there's still demand for that type of shared accommodation by students or just sharers generally. Be careful about HMOs though, because student accommodation has changed with the COVID and the fact that people have got a lot more remote learning, and the overseas students haven't come over yet as much as they normally would do. So this past 12 months as a HMO landlord, I think a lot of people have struggled. So make sure you do your due diligence on an area if you want to be looking at turning it into HMO. But overall, as the property market is still booming in 2022, I would be buying a property right now at this time, because I don't think yet we're at the very peak of the market. I think prices are still going to rise. But make sure that you're making offers on those prices. Don't pay full ask if you can help it, because what you want to be doing is making as many offers as possible. If you're not making offers, you're not making money. So what am I doing right now? When it comes to property, my mantra is to do the opposite of what everyone else is doing. So if everyone's buying property, I'm not buying property. I would be selling if I wanted to be selling anything. And if everyone's scared to buy, I'll be buying. So that's what I'm trying to do, and that's, depending on the situation, that's kind of what I'm doing. In the moment, it's a seller's market. I'm still buying, but what I'm doing is I'm always buying below ask. I never pay the asking price. I'm always trying to lock in some profits from day one. On the 18-year property cycle, there's a section that's the 2 years winner's curse. So this is when we're near the peak of this booming phase. Now, we're potentially a year and a half away from that if we're thinking that 2026 is going to be the last best year of the boom before we crash. So what this means is the winner's curse. It means that you might win at auction. The value that you're paying for that property is less than its true intrinsic value, as those who buy during this time will find there's a crash or a slump just around the corner. But I am still buying right now, and my most recent purchase is a commercial investment office which generates 87 grand a year. I bought that below ask, and I'll do a video about that one soon on this channel. On the residential side, I'm looking for properties that I can add value to, as this is my strategy for buy-to-let investing. I'm looking in the southeast of England areas. This is where I'm based, and I would like to buy properties that are no more than an hour away from where I live, because that's just me. I would be using other people though to do the refurb work, but I would want it to be kind of touching distance. I could get to it if I needed to. And like I've said in other videos, it would have to be in an area that's got good population, like 10,000 or more people, not in a rural village or anything like that. Something that's got good tenant demand, because I would be renting it out eventually as well. For commercial properties, I'm looking at commercial properties that are basically tenanted, so the cash flow from day one. But I'm looking for properties that have an angle on it for conversion to residential at some point down the track, as I do believe in that strategy. And the residential bit is great for capital appreciation. But I'm keeping a close eye on this 18-year property cycle, because you just cannot afford to ignore it, because at some point or another, house price is going to tail off, and then we're going to have some kind of slump, or maybe worst case, a crash. Because house prices just simply cannot keep rising year after year. If you're interested in learning more about my property strategy from going from 0 to 10 properties in 36 months, starting with just 30 grand, go and check this video out now where I talk more about how you can do that. Thanks very much for watching. I really do appreciate it, and I'll see you next time.